I'm Ashton Addison from Blockwise Capital for Investment Pitch Media, and today on the Crypto Coin Show with Mauricio Di Bartolomeo, co-founder and CSO of Ledn. Mauricio, welcome to the show, and thank you for taking the time.
Hey, it's a pleasure to be here, Ashton.
Likewise, I know we ran into each other in El Salvador in Bitcoin 2021, and Ledn was doing great then. And I know you and your team have been on fire despite what's happened in the Bitcoin lending part of the industry and where we are with the market in sideways Bitcoin right now. But I think this is a story that we need to tell because Ledn seems to be leading the way in actually doing things right in the Bitcoin industry. So let's just kick it off from the top for those who aren't familiar with Ledn and what your team's been working on, and then we'll dive into all the latest details.
Definitely, and thank you for that kind introduction. You know, we've been very hard at work to rebuild this industry, but let me kick it off with what we do. So as the name suggests, Ledn, we're specialists in lending, all things lending. So our flagship product are Bitcoin-backed loans. People put their Bitcoin as collateral if they need dollars and don't want to sell their Bitcoin, and they can borrow dollars from us. Placing their Bitcoin as collateral. Once they repay the dollar loan, the Bitcoin gets returned back to them. That provides all sorts of benefits from tax optimization, because borrowing is most often not a taxable event, and gets you the liquidity you need without having to sell your Bitcoin. You keep up all the upside on the Bitcoin as well. The additional products that we have is we offer interest or growth accounts, we call them, for stablecoins, USDC. Very soon, we will also be including Tether into the mix, and we also allow people to earn interest on their Bitcoin. You can earn passive income on your Bitcoin through the growth accounts as well. Those are our two flagship products, but we also do more than that. We have our dual cryptocurrency note, which is another way to get yield that is not associated with lending. It's associated with the potential convertibility of your Bitcoin into dollars or dollars into Bitcoin at a preset price and time in the future. And in return for that, you get a yield. And we also have the ability to trade and send and receive Bitcoin and dollars or USDC through our P2P transfers. So it's effectively a place where you can get get all your needs when it comes to lending addressed and find solutions.
Very cool, Mauricio. And I want to sort of start with the focus of the Bitcoin lending, being able to earn interest on your Bitcoin, and as well being able to borrow without those taxable events. I feel like that's something that a lot of the smart investors really capitalize on. And people say when you take out smart debt that no one wants to sell their Bitcoin because they don't want to have to pay tax on it, but they need more capital to invest in other things. Are those sort of the two main products, or what are you seeing the most interest in Ledn?
Most people, so it depends on where in the world you are. So what we find is in the places of the world where people don't have access to credit as many options as you have in North America, people, of course, are very drawn to the borrow product. So for example, in places like Latin America, somebody can come to Ledn, apply for a loan, get their funds dispersed in 24 hours. No local bank or fintech can do that. And no local bank or fintech will take your Bitcoin as collateral. And not only that, but by working with Ledn from a place like, say, Colombia, you can access a sort of blue chip, top of industry service at the same rates, same quality of service, same customer support than everyone else in the world can get. So it really levels the playing field in a way that no other financial service have been able to do in the past. And it's incredibly empowering for somebody in Latin America to be able to use similar instruments to the ones, say, someone like Michael Saylor uses. Michael Saylor borrows against his Bitcoin to buy more Bitcoin. You can do that with Ledn through a product like B2X. Now, it's a different provider, it's a different experience, but it's the same exact function. You're putting your Bitcoin as collateral to borrow, and if you want to, you can buy more Bitcoin with the proceeds, which a lot of our clients do. And you can do that through a product called B2X. In 3 clicks, you can basically double your Bitcoin through a Bitcoin-backed loan. But in essence, that is a very popular product in Latin America. In places of the world like Europe or parts of Asia where people have more disposable income, many people are drawn to our yields. So for example, we can pay 18.5% on stablecoins or US dollars, which is almost double what you can get in bonds or treasuries. And the growth accounts allow clients to see the collateralization ratio of our accounts. Basically, they can get to see that the dollars that we lend down are backed by Bitcoin. And similarly, in the Bitcoin side, if they want to earn passive income, they can also see how much of the Bitcoin is lent out, how is that Bitcoin being utilized to generate that yield. And they can also check our proof of reserves attestations that happen every 6 months. So it's really a level of transparency and accountability that you don't really see everywhere else. And we are known, in the past, we were known as the boring Canadians because we were always doing things that related to accounting and transparency and proof of reserves, rather than adding all these other exotic tokens, which in 2021 was, again, seen as something boring, but boring is sexy again, and it's a title that we wear proudly today.
Yeah, no, that's great to hear that. I think you guys took the high road and ended up on top, because back in 2021 and 2022 specifically, there was a huge discussion around, well, why don't I just put my Bitcoin here? It's earning 6-7%, or stable coins 10%, and it started getting a little ridiculous. Seeing some of the the Luna, Terra, it was like 20%. And at some point, something just triggered in my mind, like, that just seems unsustainable, or there's something going on in the back end. How are people getting such high yields for their coins compared to the banking being so small? And of course, it turned out it was unsustainable, and I think it put quite a bit of a black mark on the industry, where a lot of people lost their principal altogether, and 10% isn't worth it when you lose 100%. And so I can imagine that might have affected the perception of Ledn, but obviously you guys are still here, and you have the records of where you're earning the yield and all of that. So maybe you can talk about that story of walking through that time in the industry when all of a sudden everything else collapsed and you guys were still there.
100%. So there's a lot of things that we do differently at Ledn. And back in 2021, there was a big push by a lot of participants and players in the industry to pretend that all the services were run the same way in the background. And one thing that didn't help is that you had these comparison sites that would stack companies on top of each other, and they showed different yields as if they were all different types of apples in a basket, and they were all just equally, the same quality, and you just pick whichever apple you thought was better. But in the background, there's tremendous nuance and difference on how that yield is generated. Ledn was rarely on top of those charts because we have to have, our business has to be sustainable at all times. So for example, today we pay 8.5% interest to the people that deposit dollars with us. We can pay that 8.5% because we're lending that same dollar at 12.9%. And you can see both rates on our site. You can see the spread. You can see where Ledn's revenue comes from, how we keep the lights on. That has not changed. That was also true back in the Terra and Luna run-ups. And I remember, unfortunately, I had clients come to me. I remember distinctly these conversations where they said, "Mao, why can't you pay me 12% like Celsius?" And I would respond, "I can tell you where my 9 comes from. I lend at 12. I can pay you 9. This is how I can pay you the 9. I don't know how they can pay you 12. I don't know anyone that's borrowing above 12. You should really ask them how they're getting that 12." But they didn't. They didn't. They got carried away by false promises that were also they were getting bombarded with by these bad actors. And many people didn't do the same level of diligence, and they just went for the higher yield. Now, why are we still here and others are not? Well, there's a lot, but I'm going to try to distill it into a few key things. One is our underwriting has always been very strict. So an example of that is Three Arrows came by our desk looking to get a loan from us, and as part of our onboarding process, we request financial statements, and they weren't able to provide financial statements to us. So they were not onboarded with our desk. And what they said was, everyone else lends to us, to which we said, well, we don't really care. If you can't meet our requirements, we won't lend to you. So that's how we were not involved with Three Arrows. Compare that with a group like Voyager, which at time of petition had 58% of their loan book tied up with Three Arrows. If people had known this, they would have probably made a different decision. The other thing we do at Ledn is we don't expose client assets to any DeFi yield schemes. We were not involved with Terra. We were not involved with Luna. And that's how we missed that, or how we kind of avoided that. The other thing at Ledn is we're very selective with the assets we support. We support stablecoins and Bitcoin, the two most liquid and deepest assets in the lending market. There's always demand, generally speaking, to borrow dollars in Bitcoin vis-a-vis any other token. So we never had a need to trade those assets into some other assets that had demand to get deployed. Compare that to a group like Celsius or others that had hundreds of tokens that had no demand. They had to go trade these into other assets to lend them out. That created an asset liability mismatch. You had to be able to ensure that you could rebuy the asset, the original asset, if it ever got a request for withdrawal. And you had to hedge everything. And if you don't hedge that, you have what's called asset liability mismatch. And then to sprinkle another mismatch on top, you had them taking open term deposits that could get withdrawn at any time. And they were investing in mining projects or VC investments, things that have 5 to 10 year paybacks. And so naturally, when people showed up wanting their money back, there was no liquidity then to fulfill those withdrawals. And that you had to basically bring the whole thing, you had to shut the whole thing down and hold everybody's assets hostage. And so those are things that we do very differently at Ledn. Since then, we've gotten even stricter and more efficient, and our structure has gotten even more robust based on the learnings. I'm happy to talk about some of the products that we've shipped so far this year, which are quite a few. But that's in a nutshell why Ledn is in a different position today and why we're leading the market forward.
Yeah, no, that's amazing to hear, and really just sticking to the rules, and it pays off to not cut corners because everyone loses. So I really appreciate that you guys are still around and that people can understand that being able to do crypto lending is not, and even with high yields, relatively towards the banking sector, this is something that is legitimate, and there are people that are willing to borrow at a higher rate, and that split, the people that are lending are able to get quite a high rate compared to the banking system, despite the market conditions, which since the crash of Celsius and everything, there's big downhill, and now we're seeing sideways, and we still haven't really recovered. But I'm guessing smart investors are still borrowing, probably even more so when the market is down, because that's the smartest time to be taking leverage compared to at the top.
You nailed it. So what we find is that, and this isn't our first cycle. We've been doing this since 2018. So we went through the 2018 bear market. We've been through the sort of drawdown of the Three Arrows event, then the second, that sort of FTX drawdown. So this isn't our first rodeo. And what we find in these types of market conditions is that, one, loans are a non-discretionary product, as in you don't wake up one day and think it's a great day to take out a loan, right? Like a loan is something that something comes up, either an unexpected opportunity for you to diversify or invest, or an unexpected expense. And then you look at your portfolio and you say, okay, I don't want to sell my highest and best asset. I'm better off borrowing against it. Let me go find out what my options are. And that continues to be true today as it was true before FTX. If people have a large part of their portfolio is in Bitcoin and something comes up, that need will continue to arise, regardless of what players are still here and offering or not offering this service. And so the demand is still there. There's a lot less options for people to consider. So a lot of that demand is concentrating back to Ledn. And so we've seen demand actually be very healthy so far into this year, and it's improving as I want to say market morale improves with things like the BlackRock ETF application, and now the slew of spot Bitcoin, spot Ether ETF applications. You can start seeing or feeling a changing in tides, changing the tides, driven largely by this sort of new embrace by North American regulators in the sort of last few months, because in the beginning, things were kind of hostile towards the industry for the first quarter. They've seemed to have turned a corner now, and I do think that that's going to turn fully into a tailwind for the back half of the year and into 2024, because there's so much coming up in 2024 that, from a macro perspective, suggests that things really do have to change just based on historicals. Like, you have the imminent approval of the spot Bitcoin ETFs, you have the start of the US presidential campaign, you have the Bitcoin halving. All those things are happening in the first 4 months of the year. So we expect there to be a pretty positive tailwind going into 2024.
Yeah, great points, Mauricio. And it sounds like the perfect storm for, for Bitcoin to start recovering from a few years of this downward sideways market. So we can only hope. And what are you and your team working on in terms of product and deliveries to sort of align with those events coming up?
Definitely. So what we heard loud and clear from our clients is they want more transparency, more accountability, more control. And of course, we want to deliver on all of those things. So the things that we have shipped so far this year that drive the business in that direction, and I'll talk to you about a couple of things more that are coming, is one is we started this thing called the open book report. So every month we publish the utilization of our assets and to basically show our clients how we generate the yield that we pay on the accounts and how much of the Bitcoin is lent, how that lending activity is distributed amongst different institutional borrowers. Same thing with dollars. And so it's more opening in the kimono on what drives our rates and how the business operates, so that clients can assess and ascertain what level of risk they would like to take, or if they feel comfortable with our operations or how we're managing the business. The other one is we've put out or shipped more products that give clients more control. An example of this is our dual cryptocurrency notes, which are products that you can use on pairs. So you can do Bitcoin to dollars if you have Bitcoin and want to sell it at a higher price than current in some time in the future. So this is a product that allows you to earn yield on your Bitcoin, a higher yield than is in our growth accounts. And the way the product works is you select to potentially sell your Bitcoin at a price that you would be happy at in the future, at a time where you would be happy at in the future. And if in that day and time the Bitcoin price is there or higher, you don't get your Bitcoin back, you get dollars back because you would have sold your Bitcoin at that price. If the price is not there, you get your Bitcoin back plus a yield. In both instances, you get the yield. And you can also do the same if you have dollars and want to buy Bitcoin at a lower price than you have today. So that's an example of a product that lets you earn yield, but does not have the same type of risk as our growth accounts. And another example of that is we have transitioned now our yield product. In the past, you could only deposit into the Ledn savings account, which meant you were automatically earning yield. That was sort of the only place that you could deposit your Ledn money into or assets into. Right now, we've separated those things, and now we have transaction accounts and growth accounts. So transaction accounts, the assets are held primarily in cold storage or in custody. So clients can deposit into the transaction account and then opt to deposit some parts of their funds or their funds into the growth accounts, which are exposed to the risks of that lending activity to generate that yield, to generate that interest. The assets have to be lent, and obviously in any lending activity there is a level of risk. So what we have done is we have now legally and technically ring-fenced the risk of those lending operations to those particular products. So what that means is that somebody that is a Bitcoin borrower at Ledn will not be impacted by any risk of a loan impairment that from a loan that's been issued by any of the growth accounts, if that makes sense. So it's really about ring fencing risk around our individual products so that clients can have more protections and guardrails, call it, as they interact with Ledn.
Wow, very cool, Mauricio, and I'm excited to see those more advanced products come out. And from what I understand, the people that are borrowing the most are going to be institutions, and a lot of people are sort of looking at the next run and to see, is it going to be led by institutional buying or by retail interest or by the ETF or a combination? I'm curious on your perspective, dealing with institutional clients that are borrowing potentially at the bottom, on what you think that sort of mixture will be in institutional versus retail coming up to the next potential bull run.
Yeah, I think it's a great point. So a couple of notes. One, on the Ledn products, the way we like to describe it is all of our products have two clients. So to earn a yield, a client deposits dollars or Bitcoin into Ledn. That person is the supplier of the assets. Then to generate the yield, we have to lend those assets to to a second client, which would be in this case, the institutional borrower in the case of Bitcoin, or the individual Bitcoin-backed loan borrower in the case of dollars. So in both cases, we have two clients. So we're always talking to both retail and institutions. So we have a pretty good pulse on where their views, I guess, on the market. Where I think this is going, I think there's a bit of a perfect storm brewing as well for institutions. There's a couple of things happening. One, you have the new accounting rules that I don't know if you read them this week, but there are these new accounting rules that allow companies now to report their Bitcoin holdings at market value, which is a massive upgrade to the previous rules where they had to basically carry them on the books at the historic value that they bought them at. So it couldn't accurately reflect the market value of those digital assets. And so there was not a strong incentive to hold those assets in the books. But now with this new accounting rules, it's a lot more clear and a lot more beneficial for the companies to be able to carry these things in their books and show their true economic value. A layer on top of that, the fact that many treasuries are not set up to carry spot Bitcoin in custody. It's a cumbersome process if you are a large institution. And so that is now being potentially solved through an ETF. And currently we have futures-based ETFs, but as many know, futures-based ETFs are not the greatest vehicle to get long-term price exposure to the underlying asset because you have the future contract decay that keeps happening over time. So spot vehicles are much better at long-term price tracking than futures-based vehicles. So those two things, I believe, are going to fuel a lot more adoption in the markets where companies carry assets on their books, and on the companies where there's a big culture of holding assets in the sort of fund model or in the ETF model. And I'm talking about the US, basically. I don't think a BlackRock ETF is going to do much for Bitcoin adoption in Argentina, but it's going to do a world of a difference for Bitcoin adoption in corporate America.
Yeah, great points. And we've seen many, there was a win with Grayscale recently in the SEC and saying that, they couldn't deny the conversion of their fund into the ETF. But we've seen time and time again over the past few years, rejection of the spot ETFs over and over again. It looks like in October next month, there's supposed to be a handful of ETF decisions that are made again. Do you think that is the time or in the near future when one or a flurry of them all gets approved at the same time?
So I've been tracking these ETF applications. What I believe is if you look at each of these filings has 4 deadlines. They have first, second, third, and final. And what the SEC has done to date is they have delayed, and then when the final decision comes, they deny. Now with BlackRock in the mix, there's this sort of new cohort of applicants. The first one on the list is ARK21 Shares, and then there's BlackRock, Bitwise, and a bunch of others. There's 9 in total. And they all have filings that are relatively back, like very closely aligned. And the first one is ARK21 Shares, which has its final decision scheduled for January 10th, if I remember correctly, January 10th, 2024. And then BlackRock and the others come up in March. So there's a couple of scenarios here. If you want to go like buy the book, ARK21 Shares would be the first one, or the first time we would hear from the SEC. My sense is that we're going to get the SEC to delay all of the other sort of second and third deadlines that are coming up in October and November, and they're going to finally have to make a call early January and then into March. There is a universe where the SEC, just out of fairness, sits all of the applicants down and it approves all of them at the same time. I'm not sure exactly how it's going to pan out, but I believe, myself and many others that are in the industry, I follow closely the Bloomberg ETF analysts. They're pinning this at like 75% chances of approval. But I do believe it's going to happen in early next year.
Great insights, Mauricio. Thank you for that. And that makes sense that they'll probably make it on the final decision and not next month, because I feel like there's probably more to be discussed. Okay, we don't have a lot of time left, Mauricio, but I would like to talk about sort of the future for Ledn and leading up to those timeframes that you're talking about next year, the perfect storm of the ETFs and the halving. How is Ledn going to prepare with all of what's in the mix to sort of be best positioned moving forward?
Yeah, it's a great question. So we have always strived to have the absolute best products in the market. Our view is that the best restaurants have the smallest menus. And we have, in our view, the best Bitcoin-backed lending experience in the market, the best Bitcoin passive income and USDC or stablecoin passive income experience in the market. Those, as the last rally showed us, once the jets turn on, people don't want to sell the Bitcoin, so they often look to borrow against it, many times to buy more of it. We will have that. We will have options for people that want to earn interest on their Bitcoin without necessarily taking a loan. We will have that. If you want to have your USDC stablecoins or your Tether earning a great rate while you wait for the market to give you the opportunity to buy some more Bitcoin, we will have that. And we'll have our dual cryptocurrency notes, which are great products when market volatility gets turned up. That product is in the market and is, I believe, only going to get more popular when volatility comes back. And then similarly, we're going to have smoother onboarding, more options for people to use in terms of assets. There's going to be right now, today, we have 4 more products in the market than we did in the previous bull run. So that's going to continue. Very carefully curated products and very carefully curated assets, but we are always going to have the best-in-class lending experience whenever clients need us. And so that's how we're preparing.
Very nice. And for the viewers that want to learn about the current products and also follow along with the roadmap to these deadlines that you're talking about, what's the best way to stay informed about Ledn?
Yeah, you can follow us on social media. We're always very active. It's at HODL with Ledn. And you can also follow me on social media at Cryptonomista. Yeah, I write the bi-weekly newsletter from Ledn, where we talk about our updates and market insights. You can check that out and subscribe at blog.ledn.io. And you can always check us out at Ledn.io and open an account or reach out to support@Ledn.io to talk to anyone in our team if you have any questions. And I think our reviews speak for themselves. I always encourage people to go read about Ledn and what people have to say about us.
Great. Thank you so much, Mauricio. All the best with Ledn moving forward. I will leave those links to the platform and your newsletter and your socials in the notes below as well. And let's definitely follow up in the near future.
I would be happy to.